Welcome to the Predictive PlayBook. This is a special edition every Tuesday afternoon, roughly around 2:30 p.m. Eastern Standard Time. I get the privilege of having Steve Merril of WagerTalk.com come on the show. And guess what? We talk about crypto. We talk about Endeavor. We talk about the Boston Celtics limited partnership stocks. We'll talk about anything sports related or casino related, but we also will give you a free pick on the card for today. So welcome to the show, Steve. How's everything
John,
going?
yeah, great to be here as always. And I think the casino analogy probably with Bitcoin would be the best one. And I'm not saying you can't trade it because, I'm definitely saying you can trade it. You and I have made small fortunes over the past year trading it, but that's because we trade, and that means we go long and short. I still think 95% of everyone listening to us and everyone who contacts me after we do these videos is long only. And that's because, once again, they're not using the futures contracts. They're using it through these exchanges. I don't even mess with those, to be honest. The fees are high. They're not as liquid. They had problems last week. A week ago this Tuesday is when we were talking when it had crashed, temporarily crashed, and some of those froze up. John and I are traders, which means we go long and short, and we don't give a damn. I just want movement. I made a lot going up, but I've made a little bit going down. I haven't lost. I've made a little just because I made so much going up. But hey, I've been short for a few weeks, and I don't know where it's going to go. It might go to 60. It might go to 10. It goes to 10, I'm going to make even more because I'm short right now. And that's not because I think it's going down. It's just because I'm a trend follower, and I play momentum. And you also, we do it different ways. You're more of a technical guy, but you're also kind of looking at the same thing as I am. We just have different triggers that gets us in and out. But we talked about it last week, had some people reach out to me afterwards, and I still thought that gap at 45 that it had to fill was really going to be if it ever got there, would be the high. And then after Tuesday night, Wednesday, I was watching some stuff, and I really started to think 40 was the ceiling. And boy, Wednesday, I think it bounced right off of that. And now as we do this live on Tuesday, May 25th, it's 38,000 and something. So, I'm not saying it might not hit 50 and 60 again. It probably does at some point, maybe 5 years from now, a year from now, next week. I don't know. But the risk reward was so good to the upside for several months. Now I really feel like there's a ceiling just a couple thousand above where, one Elon Musk tweet the wrong way could drop it down to 2025. So anyway, that's my thought on it. I know you're kind of in the same camp, I think.
Yeah, absolutely. We don't have the market power or prowess that Elon Musk can have in the Twitter, but he's bold enough to do what he does, and it can affect you positively or negatively when you have those types of announcements through tweets or whatever social media platform. But generally, the pattern's already set when somebody comes out like that, right, and says it. It's usually in the same direction as what the pattern had already told you, and I believe 100%, or at least 98%, that the chart will tell you the story. There's so many patterns and candlesticks that repeat. There's, a brief hope today, and I emphasize the word brief hope, and it's my opinion that we could put in a doji, which is a candlestick that the open and the close are exactly the same and has wicks on either end of it. So it basically looks like a cross. And if that happens, that might be a positive that, maybe the 29,000 that was hit last week might hold. But I'm not brave enough to, step in front of this and try to catch the falling knife again. The bear markets always go down faster than the bull markets go up. And when everybody's running for the door, and in the panic situation that was going on last week, as Steve outlined, that's when markets really get out of sync. They become disruptive, and they're not working properly. And some of those platforms did freeze up, and people could not get out. In the futures markets, they ran a lot of stops, which are, you can put in an order below the market for a stop loss if you're long, and if it hits that, then you get sold out. But a lot of times, if you have a stop at 38,000 in a market environment like we saw last week, you might get filled at 31,000.
Right.
It becomes a market order once it's hit, and then all those orders have to be filled in the order in which they were hit. So it can happen so fast that an order from 44,000 hadn't even been filled by the time your 38,000 got hit. So, these are the things that took, 40 years for me to really understand and learn. So if you're just starting out with this, it's, you're definitely swimming with sharks. I mean, there's no ifs, ands, or buts about it.
Yeah, well, I mean, we talk about it's a zero-sum game. That's the big difference between
Yep.
sports betting and the financials is there has to be a buyer and seller for every transaction. There has to be an equal winner and loser, whether it's stocks, commodities, anything, gold, anything. There's a buyer and seller. Sports, that's not the case. They put out a line trying to get 50-50 action. It rarely ever happens that well, that way. And, they end up lopsided in one game, lopsided in another. But they have a 4.5% mathematical edge on a 50-50 proposition. Theoretically, they come out ahead in the long run. You get some nasty swings. But yeah, I mean, when you're starting off, the best thing can ever happen to new traders, not necessarily investors, but new traders especially, is to lose because you're not playing with a huge amount of money at that point.
Yep.
And you can make your mistakes, you learn from them, and write it off as a learning expense. It's okay if you lose at first, because if your first day ever trading Bitcoin was last Tuesday, that's the best thing that could ever damn happen to you, because you will never go broke in the future because you will be so cautious. If your first time trading was 2008, you're going to probably be a pretty good trader long term. These people that came in 2016, 2017, when it just went straight up for 4 or 5 years, they're the ones that got hurt pretty bad, I would guess, last March. And it's the same thing with Bitcoin. Like you said, I've always used the roller coaster analogy. This is my personal analogy, so maybe we'll patent this one, is that, everything ticks up, tick, 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 and then right down, and then tick, 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 tick. And that's what it did. I mean, it went from like 38 to 30,000 within a few hours. It went from $4,000 down in 15 minutes last Tuesday morning. But, I talked about that $40,000 ceiling. Boy, that $30,000, that wasn't a doji, but that was, I guess, a hammer, because you had the huge tail.
Yep.
And then the open close right above it. And basically that's capitulation. That was our word of the day last Tuesday here on the show. And those huge tails is capitulation. A doji is kind of a different form of capitulation. It's basically like a neutral market. It's a neutral candle, and it really means everything's balanced out. The buyers and sellers have exhausted each other. And a lot of times it can break one way or the other, but I really think we're range bound between the 30 and 40. That has proven to be correct over the past week since I said it last Tuesday. I thought 30 was an extreme bottom. I thought that 45 would be the top. It looks like 40 is more the top. So, like I said, I'm a trend follower, momentum guy. I think I'm going to probably be flat the next week, and I'll eventually be long or short in a week or two, depending on which way it starts to break. But I don't, my personal opinion, once again, we're not financial advisors, we're traders. I think Bitcoin is range bound. And you also see that in markets, John. When something runs like it did from 10,000 to 60,000 over like 5-6 months, and then it gets back down to 30,000 last week in a couple months, actually about a month, 50% correction like a month. The all-time high was 63,000 back in early April, and then it's 30,000 on a Tuesday, May morning Tuesday, a month later. Normally when that happens, you have a consolidation period. That's a good word. We haven't used consolidation. And I really think Bitcoin, everyone thinks it's so turmoil. All the hedge funds have gotten into it. All the big companies have started putting into it. Elon Musk has been in and out or whatever. He's still in it. I really think Bitcoin's going to be quiet for them, and quiet meaning the $10,000 range. That's not quiet for most commodities, but
No.
I really think we might be range bound, and then we got to see a break out of this range, either above 40 or below 30 over the next month or two. That'll be the next long-term buy-sell signal, in my opinion. And everyone's talking about it now, and you know how this works. All of a sudden, things quiet down. No one was talking about lumber till recently. Lumber has been nasty the last week or so. Gap limit opens and shuts since I last talked on Tuesday. I also made a call here on the show last Tuesday. I said a 100% certainty. I went back and watched our segment. I was like, I shouldn't have said 100%, that it'll gap open higher, and it did. I mean, you can see these things coming. Yep. It gapped open, by the way, on Friday, John, to exactly a 50% retracement from the previous week, from the high-low. And what did it do yesterday? Almost limit gapped open and has shot down 2 straight days in a row now. Housing numbers came out today, and they're so tied to lumber. I talked to you about this earlier. Housing sentiment, I guess you can call it sentiment, because it's the prices, buyer prices of 2008. They doubled between 2000 and 2008. They doubled, and then they plummeted, as we all know. They didn't get back to the 2008 levels until about 3 years ago. And now they shot like another 50, 60% above that. So you're thinking, wow, let's look for that turn again. But here's what's fascinating. 2008 was the highest level ever of inventory at the time. It was at a peak right when it rolled over. Right now is at a record low. So we've got the same extremes as far as price, but the exact opposite on supply. So housing is really something you can't really play it as a trader. I mean, I wish there was a way to play it. If you have one, let me know. I've looked for years. I wish there was a commodity other than lumber, which has been great, but it's very
Copper.
volatile. Yeah, copper probably, and copper's an interesting play. But yeah, what are your thoughts on housing? Any ways to play it? I've yet to really find a good ETF that mimics that stuff.
Well, the housing thing in 2008, a buddy of mine down in Dallas, Texas, who's been a longtime friend, and shout out to Big Ken down there. He and I traded a lot of money when we were on Wall Street for some of the bigger names that were, they weren't called hedge funds, but they were called by their first names. And we were watching this whole thing 2006, 2007. And, if you were any student of the financial markets, you knew there was a bubble. The problem was how to exploit it.
Right.
And there's only one guy, to my knowledge, in the movie The Big Short, where he actually walked into that whole movie is very true, every last bit of it. He went into Goldman Sachs and said that he wanted to short the U.S. housing market, and they laughed at him. And he came up with an idea of how to do a trade with them called the credit default swap.
Right.
And he wanted to do. They offered him a $2 million. And he said, well, I'd really like to do 25 or 50 million. And they laughed. Well, he did. He had an exposure, I guess, a little bit over $1 billion. He put the whole hedge fund into it and walked away with about 27 billion in that thing. But that's the only instrument, and that's a customized product with an investment bank and a very large hedge fund. So for us little guys, there really isn't any way to even short an ETF. But the 2008 situation too, as long as we keep our personal income numbers, which is an economic number, it comes out every month. Very few people even pay attention to it. As long as that's growing at the same pace as our asset values are, asset values being homes, the stock market, the S&P 500, those gains, if they match the personal increases in income, then we don't have to really worry about the 2008 situation ever happening. And to Steve's point, it's an inverse because the supply is at an all-time record low, especially here in the Northeast. It's amazing. Houses go on the market, and within 24 hours, they are gone.
Yeah, full price.
Yep.
Yeah. And I don't see that as a bubble. Well, something else we didn't have in 2008 was, first of all, the lending standards is what caused that bubble.
Yep.
There was so much supply and there was so much demand still because people could get 4 or 5 loans with no doubt. The Big Short there again, strippers owning 4 or 5 houses in Las Vegas. We'll use a sports betting analogy again, Las Vegas. There we go. But that was one of the hardest hit, markets down 80% at some case after the correction. But the other thing we didn't have and we don't have those lending problems now. Rates are very low now, so it's easier for people to buy more house and make the same monthly payment. So that inflates the value, the selling price. Inventory is at a record low because of the shutdown last year. Things weren't on the market, and they quickly sold. And then once again, it's inflation for a couple reasons. First of all, lumber costs, as I've touched upon, up several 100% over the last year. The cost just to build a new house versus a year ago is $25,000 to $30,000 more just because of lumber, all things equal. So what does that do? Think about it. It makes existing homes more valuable because someone wants to buy instead of build, because it's $30,000 more to build. That makes your selling your house $30,000 more valuable for to keep it simplistic. And then the bottom line too is my big 100% lock, my game of the year in the financials, and maybe it's a little late to exploit it now, but I've been saying it consistently for a year now, is inflation is a sure thing because you can't print money like the government is doing it. Dollar weakening, inflation. The dollar's gone down. Inflation's gone up. And those two things have been another great trend follow. I've exploited them. Where they go from here, I don't know. I personally feel there's some upside still with inflation. Commodities have run. Corn's up 40%. Lumber, several 100%. Bitcoin, several 100%. That was also an inflation. It was an anti-US dollar play, don't forget, with Bitcoin from the start. That's why I liked that back in the fall when it was 10,000 and actually was bullish from a fundamental standpoint. I'm usually technical. I like them both there. But, think about it. If you're worried about the value of the dollar, which I still am long-term for several years, I don't think we get out of this without some serious problems. And I'm trying to figure out a new way to exploit that as well. Hey, look, I don't like the way that things are being run. I don't like the way we print money and just hand it out. I don't like the fact that People are incentivized not to work because they make more not working, and businesses are going under because they can't get employees while unemployment's at a high number. Something's not right. But hey, look, that's the situation. So you and I, as smart traders, we can exploit it. Why not benefit from it and make money for your family and your future? But housing makes sense as a form of investment because it's a tangible asset. So that's another reason I do think the prices are running. They probably don't go down from here. I'd love to jump in a year or two and get a 20% discount, but I'm not sure that's going to happen. I think they were suppressed for a while. I think they continue to run. I'm not saying I'm a buyer, but I'm not necessarily a seller either.
Yeah, I agree with everything you said there. The one tool you can use to hedge against inflation is, first of all, don't use gold because that's
Right.
the old-fashioned way of doing it.
Good point. Yeah.
But what I've learned, and I once was a chief currency strategist, is you look at the Aussie, the Kiwi, possibly the Canadian, and maybe the yen, in that order. Those are commodity-based countries. The first two, the Aussie, New Zealand, and as inflation goes, those currencies will go up with it. So they're the greatest barometer. And currencies, when they start trending, the Aussie's gone from 62 back around right before the pandemic hit, now trading 77. So not too long ago, about 10 years ago, it traded 108 to the dollar. So it's got a long way to go. And it just might trend all the way to those levels. Who knows? But like Steve says, the trend, I hate this saying, but here's another financial term, Steve. The trend is your friend.
Until it ends.
Until it rips your face off. And
hopefully you get a whipsaw and get out softly.
Yep.
You don't want a V. What kills me and what's hurt me in lumber here the last few weeks, and I made a killing for 6 months, so I've given house money back, and that's the thing with trend following. You never get in at the top, you never get in at the bottom. 100% certainty as a trend follower, which is what I am. 100% certainty you will never buy the top or sell the bottom.
Yep.
And so many people try to do that, and that's that catch the falling knife analogy.
Yep.
And I'm a perfectionist, and for years it was so hard for me for decades until the last 5-10 years when I finally have gotten this and it's worked for me, is that you get the meat of it. You get the 80% middle. I'm Stevie Middle on the NBA Tip-Off Show with Joe Ranieri at 3 p.m. Eastern on WagerTalk TV, and I like the middles, man. I used to middle sports betting all the time. Can't do that as much anymore. You remember, John, back in the 90s when we started, you get 3-point middles on games at big-time sports books, even in Vegas, offshore. I mean, now that you can't even find a half-point difference between all these books. And it's the same thing with trend following. I'll take that 70 to 80% meat every time. I didn't sell Bitcoin at 63. I sold it like at 50. I didn't buy Bitcoin. I bought Bitcoin around 10, actually, so I got in pretty good on that one. But, yeah, I mean, there again, you're just trying to catch the middle. And lumber got in a while ago. It peaked, and I knew I was going to get out, but I'm disciplined. And it just kept gapping down and finally got out, and then it gapped right up. And then I'm like, I'm not playing anymore. And, so that's another thing. You don't have to play. It's like sports betting again. They got to put a line on every game. You only have to pick the 2 or 3 baseball games a night you like out of 15. You only have to pick the 3 or 4 NFL games on Sunday you like out of 15. There's, hundreds and thousands of stocks, obviously, commodity markets. I use a technical system with all of them, but when one of them are gapping up and down, that's not good. I'm going to sit back and let it cool down. And lumber started to kind of cool down a little bit today. It didn't gap or high or low. But by the way, you had an engulfing candle the day before on each side of it. Yep. So a lot of cool technicals there.
And I'll sum up the whole thing again. I always come back to sentiment. And it amazes me. On my sentiment readings are the same mathematical calculations I use in the market as I do in the sports for a single game. And when we get situations where the public and the professionals are betting on a team that exceeds 75%, it's a red flag.
Yep.
It doesn't always work, but we're sitting, the S&P 500 is kind of treading water too, but we have so much money sloshing around, like Steve said, with all these stimulus things that it's probably not likely to go down yet. But eventually someone, has to pay the piper, and I don't know how that's going to play out, but point is sentiment. You can get wildly bullish on a team. You can get wildly bullish on a stock. You can get wildly bullish on Bitcoin. The greatest one of all is the tulip craze in Holland.
Tulip mania. I've told so many people that story the last few weeks, and I've heard it for years. But I have a lot of somewhat savvy, financial people, just amateur investors, I guess, and Many of them had not heard of that story. It's my favorite ever,
Yeah,
John. And
absolutely.
what's funny about it, John, is that the best part of that whole thing, I mean, in 10 seconds, 1600s, it was a huge run of, what was it,
Yep.
Amsterdam, I guess, where tulip bulbs became the new thing. They were fashionable, became very expensive. But the best part of all that, from what I've heard, I have to go back and verify it, but at one point during the mania, two things actually. First one is that the average tulip bulb was costing more than a house at the time. And the other one that's great is Sir Isaac Newton, who discovered gravity, lost like 90% of his savings and investment portfolio falling for it. This is the guy that discovered gravity, and he was dumb enough, because that's the takeaway here. I don't even say dumb enough, naive enough, because a little knowledge is a dangerous thing. This is the guy that obviously is one of the most brilliant people in mankind. He lost 90% of his money with tulip mania. So don't think it's about smarts. It's about human element, emotion. It's about having a game plan. We talked about that with Bitcoin. It's about having an exit strategy. Don't guess if it goes to 40 or 30. Know what you're going to do when it hits 32 next time. Know what you're going to do when it's dropping $4,000 in 15 minutes. I knew what I was going to do. I was already short. Didn't change anything. And I'm a daily trader, so it wouldn't have changed anything one way or the other. I would have reevaluated after the market closed. That's another tip. I think you kind of do that as well, John. You don't have to trade the 5-minute bars and the 2-minute bars. That's the casino.
That is the casino.
Unless you have a quantum computer that's like 2 feet away from the exchange where you're beating them by half a millisecond because you've got a faster internet connection, you're not going to win that game. Talk about the winners and losers, the zero-sum game. You're not going to win that game. So you need to have a little bit more than a 2-minute window in your trades is my takeaway.
That's the chop block.
Right.
When you try to do that stuff. And that's just, that's foolish. But again, the sentiment, learned it from some of the smartest guys, could have possibly imagined that I was lucky enough to even meet, let alone learn from. And, it comes to like a simple thing. You have a seesaw, you have fear on one side, you have greed on the other. Bitcoin reached a level where the seesaw was pointing straight up in the air with greed on top. Nobody feared anything. It was a lock. It was going to whatever level. It was going to double, triple, quadruple. And everyone was convinced that was going to happen. And not because they're dumb people and the herd is dumb. It's just the way life is. And when those situations happen, bang, we get this correction. Now we got a little bit of fear in the market, which is healthy. So it doesn't mean that we're going to necessarily go down to 10. You have to take it one day at a time. But I don't think, longer term, I don't think this is done yet on the upside. But that's called, like Steve said, that's called a guess. That's an opinion. But when you look at the analytics, that's what you need to do. You need to see the story that's being told to you by the charts. And it's not rocket science. You can watch Wall Street shows and they'll make you think that it's, the most sophisticated math in the world. Right. Mortgage-backed securities they were pretty complex instruments in the beginning. And I was part of that beginning, and it was the greatest product ever. It helped regional banks get mortgages off their balance sheet so they could do more. And then the institutions sold it to institutions. But then, like so many things, it got warped, it got abused, it became basically unregulated. And then in that movie in The Big Short, where they're all lined up behind the blackjack table, then you have a pool of mortgages worth, say, $200 million that all of a sudden now is leveraged to about $35 billion. And that was the problem that, the Federal Reserve, they just, I guess, turned a blind eye, just like the commissioner of baseball did during the steroid era. There's another example of commonalities between the two.
Well, and here's the commonality with baseball is that, first of all, I'm not so sure they didn't somewhat realize what was going on. I don't think they're as smart as people think, so maybe they didn't. Baseball obviously knew what was going on. It saved baseball. They wanted every bit of it. That's why I think it's so awful that guys like Roger Clemens, Barry Bonds aren't in the Hall of Fame. I mean, the pitchers were on the steroids too. They were throwing the ball to them. And Barry Bonds also was a 30-30 guy before he had a hat size one size bigger. So, I mean, Barry Bonds was a Hall of Fame player before he ever took a steroid. That's my argument there. So was Roger Clemens. Roger Clemens was a Hall of Fame pitcher in the late 80s, early 90s before he ever took a steroid. So I've always been adamant about that. And if it's a test of character, then why is Ty Cobb and these other guys from the early 1900s in the Hall of Fame? They were nasty human beings all around. So, I mean, it's about what you do on the baseball field. They should all be in there. But, yeah, it's an interesting analogy, John, because I don't think the SEC actually, I don't think they're smart enough to know what's going on. If those guys are as smart as everyone thinks, they'd be making billions as traders and hedge fund managers. It's kind of like people that are law professors. No offense to our law professors out there. I probably just offended several of them, but, it's like, there's different types of people that, and like I like law. I was close to being a lawyer, as you could tell, probably. Most of Congress are lawyers. And you talk about a day late and a dollar short. I mean, they regulated the hell out of this whole thing after it had already ruined the financial markets and ruined the housing economy, and then they overregulated on top of that. They underregulate, then they overregulate. So, and they're trying to do that with crypto. That's another reason crypto fell a little bit, I think, last week. About a day or two after it fell, the Fed comes out, Powell comes out and talks about how they're going to do the U.S. crypto, the dollar crypto. They're trying to do like these other countries. And I thought the same thing, John. The markets always know a little bit ahead of time. Not so sure that wasn't priced into that big move as well. There's some rumblings, maybe some half rumors that were spreading out to one or two people, and it's purple elephant dishwasher. It passes along and the story changes, right?
It's true.
But going back to your chart thing, people think it's voodoo. They knock the technicals. Couple of things. First of all, whether it works or not, enough people look at it that it becomes a self-fulfilling prophecy. Resistance and support levels are those stops you talk about. And then the pros finagle that, knowing a lot of people have their stops. They shoot it an extra 1,000 or 2 below, get everybody out. That's how you get that hammer tail, and then it comes back. Yep. Those are stops getting stopped out. But that means they're gone. That's another reason it's not likely to go below 30 in the near future, in my opinion, unless we have a huge Elon Musk movement or something where the floor will just drop. And it won't be a tail. It'll be a red close below that. That's why you want to look at the closing levels also instead of a 1-minute move or a 15-minute move in that scenario of the entire day. But the bottom line with charts, anything you look at, technicals, there's only one truth in the financial markets, and that's the current price. And once again, you got to have a buyer and a seller. So you can knock technicals, you can knock charts as much as you want. You can be fundamental only. By the way, first of all, 0% way you can fundamentally analyze Bitcoin. Unless you're Nakamoto Nintendo, the dude that invented it, Nintendo Nakamoto, whatever the hell his name was. You can't analyze. These guys are like, should I sell? The people that reached out to me and they're like, so what are your thoughts? Does it hit 45? I was like, I don't know. I was like, I don't even know what a Bitcoin's worth. I never have. I'm a trader. I'm trading the momentum. Nobody knows. And that was my thing with DraftKings. We've talked about that here on the show. I didn't get involved with DraftKings last year when it went public because I had no way to value that stock. And there was no technicals to go on. We had no price history because it was a private company. But you can say whatever you want. The S&P, I think, has been vastly overvalued. I've been wrong on that, but I've been long because the trend's been up, and I've been making money on it. If I was a fundamental guy, I would have been shorting it for the last 9 months, maybe with Rob Vino's money only, but I would have been wrong. And, the price is the truth. But like you said, those prices drop a lot faster than they tick up for several weeks. And I think the S&P, we talked about it last week here on the show, it held that support level. I think it was like 40.70. I forget exactly what I mentioned. Never hit that again. It has gone up since. I think that's range bound, but I don't think it's going to break those highs. I'd be very surprised if it breaks the all-time highs from a couple months ago or over the last couple months.
Oh, anytime soon for sure.
Yeah, I think it's range bound, and I think it's more the risk reward to the down is a lot better than the risk to the up. So the risk to the up is worse. The reward to the down has a lot of downside, and
right.
Bitcoin, I don't know. I really think Bitcoin is range bound. I think it's 30 to 40. It's at 38 today.
Yep.
So I wouldn't be adding to it. If you want to sell, probably not a bad time to sell. I think you've got a 8-to-2 ratio there. Could go down 8, could go up 2. So that's how I look at things.
And you can always get back in. You can, that's the discipline with selling out of a position you're not comfortable with. There's a big difference between hoping it goes up tomorrow or next week and getting out and reassessing it and then getting in when it actually is.
And sell a position. You always do a great job with the in-game betting with sports. You talk about pre-flop 25% in-game. I think that's something we have to remind you, and I know this, but you don't have to sell 100%. Just like in sports betting, most people, 99.9% of bettors bet 100% on their game. They play -3, boom.
Yeah.
But there's no reason if you're not sure which way the line's going to move that you don't play 50%, and then if it goes against you, you only play 25% more. If it goes in your favor, you play maybe 55, 60% more. So you have a little bit more than 100% of a normal play. And, people don't think that way. It's a very fluid market, and you have opportunities all day long to get in and out. And also emotionally, human element, once again, emotionally, if you sell at the wrong time, kick yourself. It's just like the last game you cut from your sports betting card every night. You almost kind of wanted to lose because you didn't use it. The game that's your last cut, you kind of want to win more than the other ones because you don't want to kick yourself. Whereas your best bet, win or lose, you're like, no regrets. I would have used that play 100% of the time. Same thing. Don't second guess when you're buying and selling. If you sell 50% of your position, it goes up, you're happy you're still in. It goes down, you're happy you're half as much in. I mean, it's a great emotional hedge, and it's a good money management move as well.
Especially in the NBA with those totals where I play the volatility. I don't want to say it's easy, but the point is you have to have a plan going into it. Exactly. You can't watch the game and then decide that you're going to do X, Y, and Z, or you're going to hedge a bet. That's a way to really start losing a lot of money quick. But speaking of NBA, I know that Mr. Merril is doing quite well in the NBA, and he has his top-rated bet today, and he's also the $2 man at WagerTalk. So you can get his absolute best top-rated play for the 5%er in the NBA tonight for just $2. And $2 is like a quarter of the IPA that you're going to be buying at the bar tonight. So this is a golden opportunity. There's no promises either way that it's going to win or lose because Steve makes money over the longer term, just like we've been talking about with the marketplace. So, but it'll give you a firsthand look at the incredible research that he provides and the reasons why you would want to put your money along with his and not Rob Vino's and make the bet.
So, and the $2 thing, it's just happened to work out that this is the play I've liked the best in the playoffs. I've said for weeks on all these shows that over my 25-year career as a full-time professional bettor, I think the NBA playoffs have been the most consistent moneymaker for me. Baseball is the most profitable sport because you've had tremendously more games, over any other sport. But the NBA postseason, just year after year, consistent, real up and down regular season for me with all this load management. It's the most random NBA regular season I've ever seen. So I've really been licking my chops for the postseason. We've all talked about it here on the show over the last few weeks. And first week, 7 days in, I'm 6-2, 75% of the playoffs. 1 weekend, we've got several more weeks, several months actually to go. And I love this game tonight, 5% game of the month. And it just happens to be Tuesday, so I was able to make it the $2 Tuesday play. And the reason I'm doing that is because I want everyone to get it. Can't give it for free. It's got to have some value. You got to put a price. So you got to make sure there's serious people getting it because I want them to literally buy the play for $2, make a small investment, small commitment, show me that you're serious, and then reinvest the winnings after tonight in a direct subscription, like you said, because that's the way you make money. I've got a 4% baseball best bet up tonight. That's for subscribers only. You can't buy that as a one-off. So, even tonight, it's worth being a client because you're getting both plays. And that's how you win consistently for 25 years like I have. But this was a good opportunity. It's a game I like a lot, my NBA game of the month. I could put it up for $2 because it's Tuesday. And then I want to get people on board. That shows me that they're semi-serious about, becoming a client and taking a real investment approach. You're always going to get the big game hunters. I don't advise that. I can't control what people do. They hop around every week and they just play the big plays. You're going to win more times than not doing that. I don't think it's a terrible strategy because all of us at WagerTalk.com and SportsMemo.com are professionals. These are the games we're using, and we've done this for decades. That's why we're on those sites. But I'd rather take a long-term investment. And there again, don't try to guess when you buy or sell. That's the same thing as trying to guess when you're going to buy or sell without a game plan. Have a game plan. John, you've got a strong play going in a different game tonight in the NBA. We were talking before the show. Get both of our best bets. They both have a mathematical edge, and we have two different games. So why wouldn't you play both of them? Go to SportsMemo.com, get John's. Go to WagerTalk.com, get mine. And more importantly, get subscriptions, And that's not because I want you to be a client. I'd love to have you as a client, but I want you to win. I want people to win. It's not a zero-sum game in the sports betting markets. We could all win. The bookmaker is the enemy.
It's true. That's all real good, Steve. Thanks for the endorsement as well. But I guess that'll be it for today's show. We have Manny's Pub, the Predictive PlayBook edition, coming up at 4:10. 4:15-ish. Sometimes I start early while my cohorts and Tony Finn and Rob Vino make their way into the studio. But it'll be good to ask Rob Vino about using his money for the Steve Merril Bitcoin trades and the Steve Merril. What was the other one? You were
John. Well, I know you were watching, John, because I saw you in the chat after I didn't see the live chat, but when I watched the replay yesterday, I saw you in the chat room, which made my day, by the way. I wish I'd known you were in there while I was doing it live. But as you know, John, I had Rob Vino so flustered yesterday on Monday, mathematically and in other ways, that he actually busted out Dogecoin, and I told him it's doggy coin. So you got to ask Rob Vino about Dogecoin. I can't even say it. I mess around with the name so much I can't even say the real name now. That's what happens, kids. You cross your eyes or whatever too much, it becomes permanent. I say hors d'oeuvres. I've said hors d'oeuvres joking around for like 20 years, and now I say it out of habit. It's a bad thing. It's hors d'oeuvres, but Dogecoin, I guess, is correct. But talk about something I wish I could. We've talked about that on another episode. I wish there was a two-way market in that, my man. By the way, if there was a two-way market, keep in mind this is something real quick on Bitcoin we haven't talked about. When the future markets opened about 3 years ago, that they literally opened the night they opened the CME exchange that Sunday night was the all-time high ever for Bitcoin. Basically, right at 20,000, maybe 19.9. Let's just say 20. It never went higher until 3 years later, this past fall, when it went down to 10, even lower than that, maybe 5, and then 10 in October, got back to 20. But the first night that we had a true two-way market ever with Bitcoin, where you could go short. That's not selling. It's when you go short without already having a position. Can you imagine if Dogecoin went on the future markets? My God, that would be our 100% home run, John Ryan, right there.
Yeah.
But
that was,
there's no way to do it, unfortunately.
Nope.
But ask Rob about Doggy Coin. That'll get him going.
I definitely will. And I don't know if you saw on Monday, for those that don't know, it's $9 Monday. So Steve comes up with these creative ways, and it's comical, of turning $9 Monday into $3 Monday by releasing 3 picks on the same card. So then they were starting to get on him. So I was in the chat room and I said, well, I don't see anything wrong with it, because I myself would price it at $3.14159264. That would be my cost. Pi. I mean, I don't see
March
anything
14th is Pi Day at all the pizza joints around here. On March 14th, they always do the $3.14 Pi. We got to get WagerTalk and Sports Memo next year in March. You got to remind me of that, John, because I did see that. It was cracking me up. And what I forgot, I had to do it one better. $3 Monday wasn't good enough, so I did $2 Tuesday with my NBA game of the month. I'm going to pretty much, if this trend continues, I'm very cognizant of trends, obviously. By the end of this week, I will no longer be making any money as a professional handicapper. So I need a hammer candle after tonight to reverse this trend, because it's pricing myself into the poorhouse.
Oh, we just take one day at a time, one day at a time.
I will say, spoiler alert, there'll be no $1 Wednesday, but I will probably post a free play tomorrow on WagerTalk.com, so it'll be $0 Wednesday. And I do have a free baseball play actually on WagerTalk.com. I have the best bet for subscribers, but I actually do have a free play, so nobody didn't get to any baseball, but go to WagerTalk for that free baseball play, and check out WagerTalk TV. I was on the baseball show today. We analyzed 4 games plus another free play, so... Yeah, you can't afford the $2 NBA game of the month, John. There's lots of free baseball floating around from me today, too. I'm just in a giving mood on Tuesday.
And it's, they're solid plays. It's not just like guys giving out a free cupcake and saying, well, yeah, here, bet this. I mean, it's like a real play.
Right, and there's analysis. That's the thing for me. Look, anybody could flip a coin and hope to get hot and then try to upsell people, but all of us have analysis. We have reasoning. And, also, we do that because a lot of people are doing their own handicapping. I mean, a lot of people watching this show, we have a lot of sharp viewers on WagerTalk TV, but I think right here, John Ryan Sports, this would be per capita the sharpest audience I think we have. I mean, smaller audience, but per person, I mean, these are pros. A lot of traders, smart sports bettors. So they love the analysis, and I like seeing your analysis, John. I love your systems. I'll either use them or I won't, but it might get me on and get me off again. It's a filter, just like the public sentiment, the consensus. It's a filter. I feel like our free plays, our analysis might get somebody over the line or maybe keep them off a game if they're looking the other way. So lots of different ways to use the free plays and free information. Some people just blindly bet them, try to build their bankroll. That's okay. You'd be better off with the best bets, obviously. But, the analysis is an important part of it. It separates us from the 13-year-old kids in their basements starting sports websites, right?
It sure does. And if you guys are listening live right now, go over to WagerTalk.com and listen to the NBA show. Joe Ranieri, the host, is just absolutely hysterical. The guy actually probably should be some kind of comedian in addition to being a great host. But I assure you that my NBA angle of the day, which sometimes gets made fun of and it gets
Oh,
teased
yeah.
a little bit, but
I know who you're on. It's going to be yeah.
I mean, it's called. I even changed the wording of it. It's the shocker NBA angle of the day.
Yeah, people need to go watch that. It's ending right now. The replay is available all day and night. Go back and watch yesterday's show. Rob Vino was on with myself and Ski. We swept with our best bets. And I actually gave Joe Ranieri a trophy because he is so great at the end of the best bet segment. I even tagged it in the comment section on YouTube, so you can go fast forward right to it. So go watch Mondays, and then, of course, tonight's Tuesdays is archived as well. All the shows are archived. First Pitch, which I did earlier, all the free baseball information, WagerTalk TV on YouTube. Highly recommended. Yeah, it's good entertainment, but it's also good knowledge.
Yeah, absolutely. It's both. And it differentiates Sports Memo and WagerTalk from the rest of the crowd.
I agree.
It's not I'm not going to say boring, but we're kind of take pride in having a little bit of fun.
Serious but fun.
It's okay to waste 10 minutes talking about Tony Finn's childhood in Kansas. And I just wait it out, and then we get back on track.
See, the best part about NBA Tip-Off this year is they've implemented the 1-minute shot clock for the best bets. So when I hosted the show last year before Joe took it over for me, mercifully took it over for me, I did not have the luxury of the shot clock with Tony Finn. And that is something that was implemented, I think, mainly because of Tony. But it's made for good TV, to say the least.
And then occasionally he mutes Ski Profit, who's another brilliant mind in the NBA and WNBA over there.
Yeah.
He muted him, I think, yesterday or Monday. And then with 10 seconds to go, he unmuted him. And Ski was just like, what was that? And all of a sudden the buzzer goes off. And
it's always something. Good stuff.
Well, I guess for now, Steve, I'll let you go here, and I'll get set for the 4 o'clock or 4:10, 4:15 show live with Rob Vino and Tony Finn. And we have some other guests coming on as well. Tomorrow we have the PGA expert from WagerTalk. Why can't I remember his name?
Nick?
Yes, Nick
Borman.
Yes, thank you.
Yeah, he knows his stuff. Yeah, he knows his stuff.
And we're actually doing a show tomorrow at 8 a.m. About the Colonial Country Club, who's hosting the next tournament, which is the Charles Schwab Challenge. And I mean, to end the show on a really positive note, was Phil Mickelson awesome or what?
Yeah. It's always fun to see that.
I had ESPN's David Berman on today at 11:30 to go over that and also the upcoming tournament. And he's 80% of the events that I've covered with him have been highly profitable. I mean, I don't know. I've never seen a guy like this. And I guess that's why he is at the position he's in at ESPN. He just has
I mean, I do the NASCAR show with Rocky and Andy Lang, Rocky Atkinson. And Rocky, by the way, is a $2 capper at sportsmemo.com today. So you can get another best bet there for $2 at SportsMemo. But yeah, NASCAR and golf, very similar, with the head-to-head matchups, the long shots, the futures. And it's a one-off sport. And I'm telling you right now, the books get very nervous with the NASCAR and golf bettors because they can definitely win. It's like those small little commodity markets we've talked about, like lumber or something. There again, an analogy. It's the mainstream media is not talking about golf and NASCAR as much, but there's a lot of value there. It's not always just the NFL or NBA. What did you see, by the way, John, on the way out here real quick? What did you see Mickelson, the highest you saw his outright odds? I'd heard like 200 to 1, but I hadn't logged them, so I didn't see.
That was before it started. After the first 9 on Thursday, it was approaching 400 to 1.
Wow.
And I actually tweeted on Sunday before the final round started that I was gonna take Mickelson for that round and to win it.
What was his odds going into the 4th round?
Plus 275 and plus 300. I got.
How much did he fall when it got close in the end game?
He really didn't. It really didn't.
Because he always had the lead still, though. Because he always had the lead, though, right?
Yeah. Yep. And he was plus money, and he had the lead. And the whole world, again, sentiment.
Yeah, that's kind of telling right there, I think. The fact that, you can almost say those odds were falling if you're plus money with the lead. I mean, that's pretty unusual. Yeah.
It was. And I just pulled the trigger on it. And, you never bet with your heart, but I did want Mickelson to pull it off just because of what it would mean historically. But everybody in the world was on Koepka. And that Bill had no chance. He was old. Eventually he's going to fall apart. Well, yeah, that drive he hit on 16 after Kupka blew one out there at 350, and Phil just, crapped all over it. The longest drive of the whole tournament was by him on that moment.
Wow.
366 yards.
Wow.
And
So is Mickelson playing this week?
I believe he is actually.
Oh, wow.
I actually don't. We only covered the fact that you don't want to take a major champion if he is playing back-to-back weeks, which
Well,
is
that's
rare.
what I was saying. Just no matter what the event was, you wouldn't want to play him this week, I would think. And that's where I would think the fatigue, even if he's focused, the fatigue would set in. And that might be priced in. But then again, now that he's a public name once again, you never know. Be interesting to see if there's any head-to-heads with him, I guess. I might have to check that out myself. I haven't dabbled in golf at all this year, but that catches my attention.
Yeah, I mean, it was just an incredible performance. I mean, it really was elite golf. I've played that course, and it's the only course I've ever played, which is what happened on Saturday and Sunday. The wind switched complete 180-degree direction.
Yeah, that's just crazy.
And that 17th hole, when I last played it, it was, I didn't play the tips obviously, but it was playing like say 185, and it was a big 3-wood, and I got kind of up where Phil was. The next day, downwind, it was an 8-iron.
Wow.
Same tees, same distance, same
location. Yeah, that's crazy.
So, sometimes when you watch it on TV and you're, not a golfer, or you're just Saturday, recreational golfer, it's hard to, see what the wind is actually doing to the balls. If you go to a tournament, you can actually watch what the wind does. And at a place like that, 30-mile-an-hour winds, it's amazing how many guys actually played well there that were over par. Just a tremendous event.
Yeah, and I mean, wind's the one factor, in all of like football. I would say rain is overrated. It can help scoring because the defensive players slip and the offensive guys know where they're going. But wind is what I always pay attention to in the NFL, college football, and golf as well, and baseball. I mean, you look at Wrigley, the total will be 7 versus 12 if it's blowing in or out. So wind in all sports, handicapping wise, is a real game changer. So that's fascinating.
Yeah, it is. Well, I guess
I'll let you run. Say hi to the boys for me.
Oh, I definitely will. So on behalf of Steve Merril, myself, Predictive PlayBook, WagerTalk, sportsmemo.com, have a profitable evening, and we'll look forward to seeing you tomorrow. And may all the wins be yours.